Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I've been presenting the Tracking the Forex Market Together webinar by 9 GMT. Hope you're able to hear me. Yeah, fine. So I gave the first part of Tracking the Forex Market Together webinar by 9 GMT, and now the second part of Tracking the Forex Market Together between 14 and 14:45. It is 30 minutes past the start of the US session. So I've been explaining during that of the European session webinar that how exactly the live market quote page has to be used effectively in order to track the market. So I'll give the link for the same. You can open a browser. I'll also focus the camera over that of the live market quote page now. Now currently you come across euro is trading around 1.4241, 1.4243, 1.4158, 4125 is the low, 1.4298 is the high. And during that of the European session, we are seeing that by 3:30 GMT of today, that is the initial high was formed in the case of euro 1.4277, and subsequently throughout the European session, they are not breached that particular high, and suddenly by 12:30 GMT they made one extended upward stop, and from 1.42 level to that of 1.4298 and came down all the way back to 1.4224 and hovering around that of 1.4240 or 30 to 1.4260 now during the start of the US session. And still 30 minutes passed from that of the US session start, they have not breached this particular high, or they have not even gone to that of the high 1.4277, which was the initial high they set. So during trend reversal time, they are expected to make such extended upward or the downward stoppant. The extended upward stoppant was made in the case of euro today by 12:30 GMT, and within 13:30 GMT, they just dropped it. A matter of 30 minutes to 1 hour. Similarly, in the case of euro, we saw 1.6459 as the high, and they went just 3 pips above and formed 1.6462 and dropped it to 1.6412, and then subsequently trading around 1.6422. So when they have finished the extended upward stop, and that is those who kept the stops, they quickly hit all the stops, and now they want the traders to turn long with a bullish feel, and later on they wanted to make the slide. Then in the case of yen also, they made a brief upward stop, and they went up to 81.41 and then still holding in that range of 81 area. And in the case of CHF, 85.35 was the low which was formed around 3:30 GMT, and they just made a small dip to 85.45 and then went up, and not much of a move has happened subsequently from that of the start of the, from 3:30 GMT up to around 13:30 GMT. Then in the case of Canadian dollar also, they are just holding around, and you come across again they are forming positive net change as in the case of Canadian dollar, and positive net change in the case of Australian dollar. So they wanted to handle the crosses to start with. So what way they are doing it? In the case of GBP, they are not gained much, but in the case of euro, they have gained little more. Thereby, euro GBP, they have just gained the level from that of 0.8620 to 0.8684, and then subsequently 9.1 they showed briefly. Then they are making the dip. Still it is 43 pips positive net change from that of yesterday's close. So they will be handling the crosses and subsequently start making the slide in all. And you will come across surprisingly USD gaining move happening for the weekend, but it is nothing to do with the USD gaining. They are unwinding the positions and trying to book profit. That's all. So on every week basis they try to do this, and so we get surprised when the new levels are shown. In the case of Euro CHF, they are shown again lower level 1.2188, 1.2165 was the low they have formed. They are not breached yet. But below that of the psychological level 1.22, they are just showing it 54 pips negative net change they are taken. And so that those who are holding long position could liquidate for the weekend, and later on they are expected to gain the levels. So you come across more of a contrarian moves happening now, because Canadian dollar, and now it is showing slightly negative net change, 3 pips, and Australian dollar is showing about 46 pips positive net change. So you come across most of the moves are within the range of 40 to 50 pips or less than that, excepting that of euro. So it shows that many traders during the earlier days, they had taken the sell position in the case of euro, and they want all those short sellers to come for a short covering before making the draw for the month end. So let me focus the camera over that of the initial lows and the highs formed during the day, so that you will be able to understand. Now the initial high was 42.77 in the case of euro, and they just breached it around 20 pips. 42.98 they have become shown as the high, and then it is trading below that. And similarly in the case of GBP, 64.45 is the initial high, and then subsequently they made 64.62, and then now they are trading below that of 64.45, the initial high. Then in the case of CHF also, the initial low was not breached. And also in the case of yen, they breached the initial low briefly by 6 pips, and then subsequently they have gone up, and currently trading around 1980, 95, 80, 98 levels. And Australian dollar 1.0716 was the high, and they are not breached the high. So only in the case of euro they breached the high, and GBP, but others you find that they are not done any of the breaching of the highs or the lows. In the case of Canadian dollar, 97.62 was the high. They breached from 97.54 during that of the Europeans. Still they have not breached it, and currently trading around 97.73, 97.77, and 97.95 is the high, which is also not breached. You understand, when the spread is so narrow, it is not worth taking a position, because they continue to hold in that particular area. That's why I said avoid such currencies where the spread is low. That may not give any good trading opportunity. Let me go back to that of the other PowerPoint presentation. So in the tracking the market using the live market code page, I explained during that of the European session how exactly that live market code page can be effectively used for trading. And if you are not attended part 1, kindly go through the recorded version of part 1. Kindly go through the recorded version of part 1, and you will be able to understand. Probably it will be uploaded by Monday. Then you can just understand how exactly that market reading has to be done. In case if you have got further doubts, you can ask me the questions. I am willing to answer to those questions. And with regard to the initial lows and the highs, which are formed during that of the Japanese session around 3:30 GMT, between 2:30 and 3:30 GMT, I have shown it. And only in the case of euro and GBP, they breached the initial high, and Australian dollar, they are not done the breaching of the high as the numerator currency. Similarly, in the denominator currencies also, yen, they breached the low by about 6 pips, and CHF, they are not breached the low, and Canadian dollar, they breached the low by 6 pips. That's all. So now what sort of trade we can think of? Now, before going to the trading, so I'll just show you the slide with regard to the timings of the market. Now we are in the US session, 13:30 the session starts. So we have to wait for 30 minutes from the start of the session and see whether they are breaching the initial lows and the initial highs. If they are near that of the initial high and not breached it, we can take a sell position. If they are near the low, we can take a buy position. That is how our trading strategy is. So track the market using the GMT time. So we are in the US session, and in the US session we are in the start of the session, and the basic principle is when the spread is more than 40 pips, then we can take a position. If the market is near that of the low, we can take a buy. Near that of the high, we can take a sell. From the start of the session, we wait for 30 minutes. Then that is how we decide with regard to the entry. The exit will be just opposite level. What is C? If you are taking a high level sell, then low will be our initial target. And once the position makes 20-25 pips profit, we keep stop at entry. Initially, we keep about 30 pips stop. And once it shows profit of 20-25 pips, keep stop at entry and trail it down. And then we just keep this limit, the opposite side as the limit, the low set for the day. We set it as a limit. If the going is good, then we trail the stop downward, maintaining 15 pips from that of the market, and try to lower down the limit to that of the lower level to that of the net permissible level of 150 pips on the downside. If we are taking a sell, and if we are taking a buy, then up to 150 pips, the net change level, we can take the exit. Still, our trailing stop will try to protect the minimal profit. If the going is good, our limit might be hit, and then we will be able to gain that particular profit. And also explain when they are making an extended move, then first move if we observe, then you will be able to estimate the third move how much they do it. So the first extended move below that of the, say when they drop about 30 pips, then 3 times they will make the drop. So 90 pips below, if we keep the limit, we will be able to get a definite fill. If the first drop itself is 50 pips, then 150 pips you will be able to see as the one-sided move, and then try to keep the limit around 145 pips or 150 pips. Then you will be able to get the exit filled. So that is how the entry and exit are being decided using the live market code page. In the event if they breach the high or the low, the initial high or the low. Suppose euro breaches the high 1.4277, that was the initial high, and when they are making a rise from there, then we have to watch whether it is a stop and or whether it is a false move or an extended move. So if it is a stop and less than 30 minutes, they will come below that of the high what they have set. If it is a false move, they go up to that of 42.98 and then come down. Then if it is an extended move, they go above and stay there above that high for about 42.77 is the initial high, and stay above there for more than 30 minutes and try to make further rise for 2 hours and then make the drop. If it is an intentional move, then they continue to rise till end of the session or drop till end of the session, whatever the type of move. And extended stop, and I just gave an example how euro from that of 1.4220 level, they went up all the way to 1.4298 and then hit the stops above that of the high. And in some platforms they would have shown the 43 level 1.43, but assume the high is 1.4298, and from there they made the stop and came below that of 1.4277 in less than 30 minutes, and also came down all the way to 1.2220, and that shows it is an extended stop. When they make an upward extended stop, that means they wanted to drop big on the downside. So we could come across during the US session a slow slide, and during that of the next week Monday, they are expected to make further drop as a week beginning false move on the downside, because next week you come across 2 days of this month, and afterwards June starts, which has got about 3 days in that, 1, 2, 3 days of June. So they are expected to make very big volatile move during that time. And what they are shown on the downside in the case of CHF, you could come across the upside during that time. It might be a very big rise in the case of CHF, or once they finish hitting all the options and the futures, and they are expected to aggressively gain the levels in the case of denominator currencies. And that you can understand how exactly they are making different type of moves in sequence and try to bring in uncertainty in the market. Even though they use it in sequence, still we continue to get that uncertainty. After the extended move, they will make an intentional move, And during that of the trend reversal, they will make the extended stop. So now you can understand it is a trend reversal time. On the upside, they made the upward stop. So they wanted to drop at least 300 to 400 pips further down in euro. So the expected market move during this particular session is swing and slide moves. So let us try to take the position. European session, I could not take the position because I was explaining. Anyhow, in this particular session, they showed the intermediary high 1.4260. They went up during start around 13:30 GMT up to 1.4260 and then started making the slide and then went up to 1.4252 and then came down. So slowly they are making the dip. So 10 pips away from that of euro, we will take a sell. So sell limit will keep 10 pips above that of the current level. So current level is 1.4239 or 40. So we will try to keep 1.4250, 30 pips. So we'll watch for about 10 to 15 minutes. If they are filling it, fine. If they are not filling it, then we'll try to take market position. Similarly, in the case of GBP, currently trading around 64.34, below that of the initial high what they have set. They have not breached the initial high. So we will keep 10 pips above, sell limit order, 1.6443, 1.6433, 34 is the current level. So we will try to keep 1.6443 with a stop of 30 pips. Then in the case of CHF, they are making the extreme level and they may not go closer to that of the low, and so we will avoid taking a position now because they are trying to trap the traders and trying to buy at the lowest level. The move might be very much reduced. Similarly, in the case of yen also, the spread is very less, so we will avoid taking a position because if we want to take a position, we should be able to earn at least 30-40 pips or 60-70 pips, or if the going is good, about 100 to 150 pips. That should be the approach. The same position, same amount of usable margin will be blocked, but we should be able to earn substantial money rather than earning about 5 pips, 10 pips and things like that. So instead we will bet in other currencies. In the case of Australian dollar, 1.0689 is the current level. So we will try to keep the sell limit 98, just 10 pips above that of the current level with a stop of 30. Now, in case if you have the hedging facility in your trading platform, instead of a stop, you can keep the hedging order. And see, now what you are trying to do is sell during that of the trend reversal time. But otherwise, normally what you are supposed to do is wait for the drops to happen during that of the month end and try to take a buy position so that next month when they rise, we will be able to really book profit. And instead, since we are focusing on that small swing trades, we are trying to take the sell positions. So instead of stop, if you have the provision in the platform to use the entry stop orders or the hedging order, then you can keep the hedge orders. In case if you are hedged, you need not bother about it and wait for the drop to happen and capture all the profit on the downside and take another buy position during the time. And when they rise, then you can just close the highest level, the higher level buy first when it's shown profit. The lowest level buy, you can keep it and try to do a maximum position trade during the month of June when they are making the rise. So that sort of trades we can do it if the hedging facility is available in the trading platform. Then similarly in the case of Canadian dollar, that spread between the low and the high is very low, so we will not take any position there. Then with regard to that of the crosses, GBP. So the low is 132.74, the high is 133.61. It is showing 18 pips negative net change and 133.12 is the current level. But since we are not taking the position in yen and we expect GBP to make the drop, so only when it is closer to low we will try to take a buy position. Near that of the high or the intermediary level, we will avoid taking position. Probably mid-session we will watch. When they come closer to that of the low and when they start rising yen, then we will try to take a buy position. Then Euro Yen also similar condition, and in the case of Euro GBP, this is the currency they are handling now. Euro is showing about 87 pips positive net change and GBP is showing only 30 pips positive net change. You come across a variation in that. As a result, you find Euro GBP is just holding around 86.58, 86.61. So we'll try to keep the sell limit. So current level is 0.8659. So 8669 we'll try to keep. And if it is filled, fine. Otherwise, we'll modify and take market position after about 10 to 15 minutes. Then we'll keep a stop of 50 pips. Because in the case of crosses, the volatility will be very high. So we'll try to keep the stop of 50 pips. Then Euro CHF. Euro CHF, you come across Euro is showing positive net change and GBP CHF is showing negative net change. So they are making in tandem the moves 87 and 85 pips. And currently trading around 1.2194, 1.2197. And the low is 1.2165. That has not been breached, which was formed. So we'll try to take 10 pips below that of the market. So currently 1.2190, we'll keep. And stop 50 pips. Now you find that they are not filling our order. Euro already they had dropped to 1.4227. So next pullback we'll try to take a sell. Similarly GBP also they have made a dip. They are not rising it. And Australian dollar also around the same level, 1.0689, they are not dropped much. And Euro GBP, so market is holding around the same level, and also, so we will just wait for another 10 minutes. Meanwhile, I'll explain exactly the market has to be read using the live market code page. So I'll focus the camera over that of the live market code page. So now in the live market code page you cross that after making an extended upward stop and they are just making the drop, that shows that they have finished hitting the stops on that upside, and when they are holding around 1.4250, 4240 and things like that, traders have turned long. So that is why they are quickly making a drop. So when they show red order and followed by that the higher level green order is not coming in a big way. That is, if they dip 1 pip and rise 2 pips, that means they are buying it. Whereas you simply come across one buy order. So now 42.27, 42.26 they showed, and 42.27 they are showing it. And follow-up order is not coming. If the follow-up order is coming, because many people asked how to fine-tune the reading. That is why I'm spending time here. So they just gained and immediately made 1 pip dip. Let us see the next dip, how they are doing it. So if you watch carefully the live market code page, you'll be able to really understand. So now they have gone to 27. They showed 26. They have just remove the order and sell up to 26. And again kept 27. Then they have kept 29. So quickly they are keeping a high level buy order. Then immediately the following buy order is coming now. 31 they are doing it. So when they continue like this with a green order, see 32 is coming. So you should be able to understand that they are just gaining the levels. And if they simply dip, now 34 is coming, and sell Okay, now 34 again at the same level they are selling it. Now 33 they are selling it. See, afterwards you don't come across a green order. So quickly they gain the level and sell for about 2 to 3 pips. See, 32. Do you understand? It is called pump and dump move. So they don't do the follow-up gain there. They quickly gain the level by showing green order and then sell for about 2-3 pips there. Don't think that somebody is selling, somebody is buying and things like that. They are only doing the circular trades. And in that circular trade, we are supposed to take the positions. So they just remove their buy orders and sell. They remove the buy order and sell. So that is how they try to do the market moves. So now they are handling GBP. You find 64.36. They have put it from 33. Now same 36 is there. They try to gain the levels quickly. Afterwards remove the order and fill whatever the orders from that of the traders come in. Then suddenly you will find that green doesn't appear. So now they are quickly gaining the level 37. But the follow buy, whether it's coming or not, we'll say check. See, I am doing this because many of the people have asked how to read it. Now 40 order has come. Green order. Whereas in Euro they are not doing it. In GBP they are doing it. 42 comes. See, all becomes green order. They gain the levels. 44. Whereas Euro is not rising. See how they come step by step the currencies and try to do it. Then sell. Remove the order and sell. So this is the way they operate the market. So 44.33. So that is why I kept 10 pips above that of the current market level, the buy sell order, so that when they do small swings like that, they might be able to fill our higher level sell. So instead, if you try to take the position at the market, then probably when they make small swings above us, we might become panic. Instead, if you wait, now they are taking it up to 49. From 44, they straight take it to 49. And now 48 they are selling. And 49. So, you don't come across the follow-up gains quickly. They just take about 2-3 orders and just in the fifth decimal only they are changing it. Still it becomes green even though there is a change only in the fifth decimal, because in the banks they have more decimals, but in the trading market it is only up to 4 decimals. So now they are taking it to 50. Whereas Euro they are not just gained it. So this is how they just make moves in Euro and GBP alternatively and try to handle the Euro GBP cross. So now it has come to, it is making a slip because GBP they gain more, Euro they gained less. It is around the same level, GBP they gained the level. So from that of 64.12 they went up to 50. Immediately people think that okay, GBP is going to go up, but they try to handle during that of the mid session this sort of moves, and then you have to see what they are trying to do. They can take it up or take it down. Either way they can do it depending upon the pending positions of the traders. But you need to watch this carefully. If they are not breached the highs, what they have set as the initial high, in first 30 minutes, then they are unlikely to breach the high throughout the session. So that is the concept. So they are only simply firming it up. Still, we will try to take a sell near that of the high. So let us come back to that of our trading. I kept the sell order at 42.50 and sell order here 64.43, 10 pips above. Now it has become a position. So they have gone up to 50, 51. Doesn't matter. We are taking a stop. We are keeping a stop to limit the risk. At a given time, we will try to take only a risk for about 30 pips. So we are willing to accept the loss while we are taking the position. And if not, you are keeping a sell order. You can also watch the market during such small gains and then try to take a sell when they are not going above that for about 5 minutes. Then you can fine tune the entry. These are all the methods of fine tuning the entry level, instead of simply taking the market level, the positions. So this method, if you follow, then you will be able to really patiently take positions in the market and still make very good profit on that. Now, with regard to euro, 60 to 50, I kept it, and they went up to 40 to 50. I kept about 5-10 minutes back, and now it is currently trading around 42.34. GBP, they started making a dip. It's now 64.49, and so it might come to 40. So I'll just modify the order. And currently trading around 62.34, and let me keep at 60 to 40 and see whether it is getting 12. Now they are taking it to 40 to 36. Just wait for a chance. Otherwise, we'll take it around 40 to 38 and things like that. And the case of Australian dollar, so you are not supposed to take simultaneously position in all currencies. That may lead to over trading. Focus only on one or two currencies. Always take very less positions and try to maximize the profit in that rather than taking several positions and getting confused. Now, in the case of Australian dollar, 1.0691 they have come to, and they are not gaining further. 1.0690 they are holding. So I'll just modify and take a position there. So we watch the live market code page. There might be a slight variation with regard to the codes from that of the live market code page and the trading platform. You can assess the condition according to your trading platform levels, whether it is slightly higher than that of the market price or lower than that of the market price. There might be 1 or 2 pips variation because the spread between the lower ask and the bid might be very much reduced in some trading platform. And there are people who are even offering 1 pip spread or 1.2 pip spread and things like that. So there might be a slight variation and you have to fine tune accordingly. Now I have taken a position in the case of Australian dollar. Quickly they are dropped. And GBP also they are dropped. So now you are able to understand their intention. No, they simply pump up and create the bullish field and dump quickly for about 7-8 pips. So when they are sellers here, so euro they could not fill. So next chance of rise probably 40 to 30. I'll try to modify and keep it. So it doesn't mean that I missed the opportunity. They continue to give that opportunity. They don't straight away drop just like that. No, unless and otherwise that there is a data release, etc. That is why I call it as a slide. No, they swing and slide, and they will make a pullback. No, because if they continue to slide, a lot of traders might take sell position. Then they just firm it up so that such traders will stop out. The scalpers will stop out and then again drop it because they want the buyers before making a drop. And they cannot simply make a drop without any buyer. There is no purpose. So that you need to understand. Okay. So I spent a little bit of time with regard to fine tuning of the trade because these are all the delicate aspects with regard to trading, and many people were not aware of it. So I thought that I can spend this particular time live and give you a demo how exactly the position can be taken. See, I'm not very particular of making some trades in a trading platform and show you that this is what the profit I earned, because this is not my purpose. My purpose is to make you to understand how to trade. Okay, so not that I wanted to prove myself I'm a great trader or something like that. So let me minimize the PowerPoint presentation and take up the questions which are asked here. In case if there are any moves in the market, we will just make an observation pertaining to the market. So I'll just take up the questions now. They're in Genius FX. They did killing. Yeah, beautiful pattern. Yeah, see, the players have to make the traders to lose. Only then they earn. See, it is a market wherein money has to earn money. See, normally what you do is we put in money and make an investment or just establish a business, and in that we convert the money into effort, hire people and try to put in effort, and then out of the effort we try to extend some service or some product and things like that, and later on we earn a nominal profit. So that is the normal way of earning. So wherein the money is converted into effort, effort is back converted into money. Whereas in the financial market, money earns money. So the only way is cunningness. Then in add-in, what do we expect? I explained that in this session they are expected to swing and slide and make further drop quickly on Monday and Tuesday, both in the case of Euro and GBP. Okay, Ghana. How can we relate the quote with Euro now? Oh, that is what I showed in the live market quote page. How exactly they had taken that quickly gain the levels and drop. Initially by 13:30 GMT, you would have noticed that Euro went up to 42.60 and then came down. In the chart probably you will be finding that lower highs are being formed, and later on we try to take a sell position here. But we try to fine tune it by looking at that live market quote page and try to take the position closer to that of the intermediary high. We know that they are making quick follow-up gains and after a stop. And once they stop in the next quote, we try to take a sell. We just watch for 5 minutes and try to take a sell. So that is how we can fine tune our entry. Then Trevor, he says, you are a genius. It's not the question of getting this appreciation. I want everybody to become a genius and try to outbeat the players. Then Genius FX. Daily butterfly on the USD CHF shows 89. Okay, you can follow any of the patterns, but also try to use the live market quote page as an additional input for you to fine tune all your entries, because this is similar to that of the tick chart. But if you see the tick chart, it will be a very elongated chart and your eyes will become fatigued. Instead, if you see the live market quote page, you can see how they are showing the green order and suddenly sell. Okay, they are sellers, let me also sell. And confirmation, they are not gone above that of the initial high in the first 30 minutes of the session. So they are not going to go higher than that till end of the session. So that is how we try to conclude it, and that is the way they make the moves in the market. It is not our conclusion. That is the way they make the moves in the market. And we understand such moves and try to take positions. Because we have to, only way to earn money is we have to trade along with them and earn. We cannot outbeat them because they have got the money power. Can you explain USD CAD again? USD CAD, see, the initial low was 97.60 and they 6 pips below they came down and formed again. They have gone up to the above that of 97.60 and holding around 97.71. 97.95 is the high. They are still not breached for 2 sessions. Okay, the spread between the high and the low is less than 50 pips. 40 to 50 pips. In such a scenario, if you try to take a position, you may not be able to book profit on the same day. You might be able to book profit in next day or so. If you are willing to do that sort of trade, fine, you can take position. If you are not willing to do and you want to trade, avoid overnight interest, and you do not want to have any sort of uncertainty during the weekend, then avoid taking positions in such currencies. That is what I am trying to do it. So, in the case of CHF, for example, they made the drop from that of high to low, and they are making a small swing around 85.70 to 85.60, 85.58 and things like that. And when the spread becomes so narrow, you understand that they are simply holding at the lowest level and doing a small circular trade. You come across most of the time it is red. They are not making swings like this. So they simply keep the orders, keep a sell order here, keep a buy order here, and just remove the buy order and again keep back the buy order, and then it becomes green, and they don't buy it at a higher level. They simply hold it here. So any selling comes, they try to absorb it. In such a situation, after accumulating all the sells only, they are going to rise it. Okay, this we have to understand. So now they are making the swings again. They have come to about 36 now. So now our euro position is filled. So GBP they have come to 50, and then again they are. So pump and dump move in a small way they are doing it, and later part of that, see now we have spent about 45 minutes. So they are slowly doing it because they have to handle the mid sessions, the crosses, and later on they have to come to that of the late session, then they have to handle the majors. So nearly another 6 to 7 hours they have to do it. So they will not do it in a hurry. Slowly they will build the sell position and later on let loose the market. Then Zebra, have you changed your view on the Euro CHF regarding 1.20 level? Seems to be going there. Now Euro CHF, see, if they want they can show it. There is no hard and fast rule, they should not go there and things like that. No, and I said that it is most unlikely. No, they may not go to that extreme level because once they go deeper and deeper, the volume will dwindle. Those holding the old positions, they may come for liquidation. People may not take in adequate quantity the fresh positions. So that is why in the case of denominator currencies, they are holding it for a long time. But in the case of Euro and GBP, you come across traders holding long, traders holding short positions. So you'll come across either way volatile moves very quickly. So that volatility will give us enormous trading opportunity. And simply chasing such denominator currencies and the currencies which are in extreme level, which will be a real painstaking process. Probably we can just give a prediction that it may go to 1.20 or it can go to 1.6183 or 265 and things like that. But trading is a different situation. I can comment that from here it can go to 1.27. But will I be able to withstand such a stress of holding the position for nearly about 3 to 4 months and try to book profit? Whereas I was giving the prediction, I was giving the trading idea in the case of Euro that sell around 1.49, you will be able to see 1.44, 1.42 and things like that. See, that comes in a matter of 2-3 days in a position trade or a matter of 1 week. Whereas here, it will be a patient testing game. So, as traders, we should try to earn as quickly as possible and reinvest the money somewhere else and try to earn money. And quickly we have to rotate our equity. There comes our smartness rather than telling that I have bet that it will go there, so it has gone there. What is that I achieve out of that? Let me give the forecast any way I want, unless and otherwise I participate in the market. I'm not going to earn any money out of that. That is nothing but the ego satisfaction. So that is not a big deal at all. Then who do it, Adam? The big players. This good that you explained the quote page. Okay. 80, how do you tell they have reached a high and lows? See, I explained the different type of moves they are making in the market, and after making an upward extended stop end, that means they have done the stop end on the upside. Those who are holding the stops, they have filled it. Then afterwards the traders have turned long, and also those who are not kept the stop also, they come in a hurry and try to close it, losing the patience. Then later on they will drop it. So you have to read what they are trying to do. Are they trying to trap the short sellers? Are they trying to trap the long holders? You have to read it depending upon the type of moves. Once you become habituated in reading the market from the live market code page, you will find it is a child's play understanding their moves. Automatically your brain will calculate. See, looking at the chart and trying to figure out is something like a small kid trying to look at the picture of an elephant or a donkey and trying to say it is donkey or elephant. Whereas once the child grows up, when you show the spelling, the child is able to recognize. So we have to grow in that. Then masking. Can you please go over to the portfolio selection again? What are you exactly looking? See, it is a very simple process. The spread between the high and the low in the live market code page should be more than 45 to 50 pips. So in the case of yen, which is just around 50 pips. So if you try to take a position, you just imaginarily take a position or try to take in a demo trading platform in the case of yen, or in the case of CHF, because it is in the lower level consolidation now, or in the case of CAD, you hardly make about 10 to 15 pips profit. So for the time you take to hold the position, you may not be able to get adequate profit. So if the spread between this is more than 50-60 pips, then try to take positions in that currency. You will be able to earn nicely. Quickly, the same time frame of within the session, you will be able to earn about 60 to 75 pips profit. So try to bet on a currency wherein the profit proposition is higher. That's what I am trying to do it. Then Vijay, taking an explanation, the fine points, okay. Then Bazak, please explain again what is happening when they bid higher than the ask implication. Okay. In case you come across suddenly a bid is higher than that of the ask. So first they show it one. Say now euro is currently trading around 42.43, 42.45. Suddenly they may show 42.55 here as a bid, and 42.45 will remain as such. And now they are not shown it, and in case if they show, and you will be able to see in the live market code page the bid becomes higher than that of the ask. But actually in the trading platform you will not be able to see it. They use the all or none order and try to see whether there are stops above that of the market or limit orders. If there are limit orders there, what it replies? The traders are holding long position and they want to exit out of that. And if there are stops, then the traders are short and they want to keep the stop above. So if there are stops there, they try to check it on the bid side once and then try to check it on the ask side. You will find a higher ask and a lower bid. The spread between that will become about 10 to 12 pips. And sometimes before the data release, you come across the spread becomes wider because they remove all the orders. That is why it happens like that. And suddenly they dump in the orders. So when the spread becomes high, they try to check what are the orders pending, and accordingly they try to take the positions. And they try to make the moves in the market. So if the traders are all long, they drop. If the traders are all short, then they try to do a move upward to do the short covering and then drop. But if they don't go above that of the initial high. They will swing around that and create the fear for those who have taken the short, if they have not kept the stop, to come for the short covering by making a small pullback. So during such pullback, you try to take a sell, and once it makes profit, try to keep stop at entry. So if they hit it, don't worry about it. They may do it again before making a drop. At the time you can re-enter again, sell. So some people have got the tendency, if I am stopped out and quickly with the market drops, what do? It's not like that. And they have to make several such swings in the market before making a good drop, because they have to build the position. It is not like one lot position and afterwards they have to drop. They have to build at least about 20,000 to 30,000 lots positions. Only then when they make about 50 pips or 100 pips drop, they earn about 10 to 20 pips on an average. And Eric, so you don't expect much of a drop in Australian dollar GBP? No, I'm expecting the drop as a slide now during that of the US session. And towards late Europe US session, they are expected to drop and make further drop on Monday. See, it is a question of traders' participation. When the traders are hesitantly take positions, the players have to wait. Simply they cannot drop just because the forecast says that there is going to be a drop, because they have to earn money. No? And when the traders are not actively participating, then they make such swings, circulate and attract the traders. Some will think that it might go up, let me take a buy. Some might think that it will come down, let me take a sell. So when the traders have taken positions, they try to see net long and net short positions, which way they can make moves so that they will be able to earn. They try to move either way and try to hit the stops. If not, at least they try to make a move in one direction so that they make more profit. So if there are, say for example, 100 traders taking a long position and 5 traders taking sell position, and the downward move will be a better proposition for them. That is how they make the moves. So it is nothing, they don't follow any of the technicals. They only just ask all the traders to follow the technicals, but they only go with it of the physical positions of the traders. Can you keep our sell order over the weekend? You can do it. You can estimate and keep it. And sometimes if they make a big upward gap opening and things like that, you might feel really afraid. Or sometimes if they don't fill and come down, and then you are tempted to keep a lower level sell. Next time they may go above that. Best thing is you watch and trade rather than keeping an order and thinking about it and you don't get sleep. And Rami, see, as far as possible, don't stress yourself during trading, because the stressful condition really induce you to lose patience, and as a result you may go in for a distress trade. And Rami, do in this case apply all days, month, or only near the end of the month. So on a daily basis, this is what they do. And month end, the volatility gets increased. That is the only thing. And they bring in the trend reversal. And you have to understand, for that you need the algorithm. But intraday trades, you don't require that algorithm to give what is going to be the direction of the market, either on the upside or on the downside. But intraday moves, you can always fine tune it using the live market quote page and try to do it. Now our euro position is filled. They are making slightly higher rise. So I'll review that after going through these questions. Do you expect possible drop to that of the session low? Yes. Slowly they are expected to drop and breach the low during the day towards your session close. Eric, do you expect possible drop in the session? Yes. Genius. Well, who are these players? Can you find pictures of them? What is that you are going to do out of that? Their pictures are available everywhere, but you are not able to understand. Please show your focus page. I'll show it, please. This is not like when you see the puppeteers after the show is over. Okay. AUD has dropped. Yeah, AUD is still there hovering around because they are firming up a little bit and dump again. So they are making swings now. So don't be in a hurry, and while dropping don't sell, while rising don't buy. You wait for such moves, and when they firm up, you know that they are not breached the initial high, try to take a sell. So that sort of moves you have to do it. Then grow. Why do you see the USDN? USDN might slowly gain the levels. Bro, when do you see USDN going? Probably by next week, let us hope. Do you even use charts or just the live market code? I stopped using the charts because I tried for nearly about 10 to 12 years for my market analysis, and I found that when you follow the chart, they are easily able to trap us. That's the reason that I stopped looking at the chart, nothing more than that. In written, see what you come across as technical analyst, because I'm basically a applied statistics professor. So I just applied all type of statistical analysis with regard to various type of moving averages, and even gone for the level of cluster analysis, the exponential analysis, etc. And ultimately, whatever the analysis you do, they make the moves depending upon the open positions of the traders. Thank you for an extraordinary. Okay. Then if we see, do I understand correctly that high and the low set in the session, that is your list in the Asian session, is not exceeded in the Asian session and not during the European session? You say that they do it at a close of the session. Is that close European session? No, today because of the trend reversal time, they made an extended upward stop and around 12:30 GMT. Otherwise, they don't do it. And see, every session they have to change the scenario. They cannot continue the scenario as such. So, Asian session they found the high around 3:30 GMT, and then they are not breached it. European session they are not breached the high in first 30 minutes. So we could have done a sell and buy trade, sell near closer to that of the high during that of the early European session and closed it before 12:30. Then again 12:30 we found that they quickly gained the level and started evaporating the levels. So we can take a sell position and quickly book profit. So we have to always look for quick moves and take positions. Then it is easy for us to earn money in a matter of about 30 minutes to 1 hour. Then NASCO, USD GBP Euro made a new low against the CHF, safe haven. Do you expect a major reversal in the CHF? See, that is what, whenever CHF drop, USD CHF comes down, immediately people say it is safe haven and things like that. There are so many occasions we have seen US dollar was considered as safe haven and Australian dollar was considered safe haven. So every time a new currency will get the glory of becoming safe haven. So it is not a permanent thing in the market. Then stop. Any change in dip to 63.30 before making a new high? So they are expected to drop, but if you keep the stop and try to see, that is why initially you have to decide about the stop, and you should not try to do a crisis management. That is, allow the position to make about 100-150 pips profit loss, and then see, now you come across higher level ask 42.79 they showed in euro. You are trying to check whether the stops are above that of 42.77. So if there are stops probably from the traders, they might make an attempt and come down. Then Roni. Do you take position only on the beginning? Yes. Beginning of the session, if we take, then it is easy for us to close the position within the same session. GBP touched the high. Yes. They breached the high by 3 pips. Yes. Okay. Let me go back to that of the PowerPoint presentation and review our positions. So Euro becomes a position now. And currently is closer to the low stop. If we are stopped out and we will just wait for 30 minutes, if they are not going above that, we re-enter, sell again. And similarly, now 30 pips above, it will be 64.73. If you have stopped out, they cut the high by 3 pips. 64.66 has become the high. And if you have stopped out, then we will try to re-enter, sell again. After watching for 30 minutes. If they are not taking it for the high. In case if they take it, stay above that of the high for more than 30 minutes, then we try to take a buy there and try to book profit as a technical trade. So that's what I explained. If they make an extended rise, then we try to do it that way. I think they wanted to take it high and they checked the ask side, and I think there are some stops. So they are trying to hit the stops and come down. So 30-40 pips swings up and down, nothing to do with the economic conditions of the currency or the countries. So the country economy does not oscillate like this. No, and they simply make the moves depending upon the trader's pending position. Now they are just gone to 42.78 in the case of, so 42.60s is stopped. Then other positions we are holding it. We'll see how exactly we are doing it. And 42.77 is the initial high, and the new high is 42.98. When they go closer to that or briefly make an upward stop and come below that in less than 30 minutes, we re-enter, sell. Okay, so that is how we don't mind making a loss, and if the loss is small, then we are willing to accept it. If it becomes big, then it becomes unwieldy. We have to really spend a lot of time to control it, or we have to go in for an average and then exit out of that. Instead, you can just stop out, and if they are not going further upward, you get a better level to enter, sell, and quickly with their drop, you will be able to get the profit. So they are trying to hit the stops on the upside now. So AUD, they are not gained much. Only in the case of Euro they have done it. So they found isolated stops in Euro, and GBP also they are trying to hit. And Euro GBP 86.69. I think they would have filled it. I'm not very sure about it. Euro CHF has become a position. So we will review these positions during the day, and probably I'll just post it in the blog also if needed, if you want to track it. Otherwise, you can just note down in a paper and see what happened to those positions. But basically, what is more required is how to develop your trading ideas. So I thought that I explained it. And if you have got further questions, you can ask me in the blog. I'm willing to answer to this. Probably next webinar, next Tracking the Forex Market Together webinar, I'll try to take certain other topics pertaining to that of reading the market and explain more about the type of moves. Then it might be beneficial for you to read the live market quote page and focus it as a main tool for your trading decisions. Then whatever in the blog I explain, you'll be able to follow it easily. Instead of getting surprised how this man is giving the forecast, you yourself will be able to do it. So thank you one and all. See you on Monday during that of the Asian session live market analysis. Thank you.